What's going on, guys? Welcome to episode 6 of Rollin with Zolin. This show is dedicated to giving you the keys to succeed. Today, we're going to talk about on-market deals. The biggest misconception is that on-market deals are not possible. I want to challenge any of you that have this perspective or mindset to understand there are plenty of these opportunities out there. And not only are they out there, my team's doing about 5 to 10 of these a month. A month, you heard me properly. I want to dive into how these are done, how the transactions are created, what filters I'm using, and then also what types of transactions there are for on-market deals. You might not have even known, but there's 3 different ones. With that said, let's jump right into that. So we've got the types of transactions. We've got traditional, we've got unrepresented, and we've got dual agency. This is probably the one that you've heard most of, but this is the last one that I'm going to dive into because, again, being the most common, this is the best way to do it. But I want to give you the 2 other options so you know any given situation of how to fully capitalize on the deal and to make the most money possible. So with that said, we're going to jump into traditional. The easiest way to explain a traditional transaction with a wholesaler on market is that there is the buyer, the buyer's agent, the wholesaler, the seller, and the seller's agent. For those of you that are wholesaling that maybe haven't done an on-market deal, a good way to compare this one is that instead of the acquisition agent being in the picture, you've got a listing agent. So again, just treat your listing agent like as if they are the acquisition person bringing you the deal, whether or not they sent it to you or you found it from them. Again, diving into even more with the traditional, with those 5 pieces in the transaction, keep in mind, the seller pays the commission. Always remember this. The easiest rule of thumb is that there's 6%, 3 and 3. 3% typically goes to the listing agent, 3% goes to the buyer's agent. So understand that whether or not you have a buyer's agent that represents you, or if you're going underrepresented, or if you're having that listing agent get both sides of the commission in their pocket. So we now are going to go into the unrepresented deals. I do not advise to go into this kind of transaction unless you've done a handful of deals, you understand the contracts, you understand the escrow, and more importantly, you just know what you're doing. You know how to protect yourself, you know what terms to look for, and you know what you're doing with making sure you're not going to lose your money or maybe a private money investor's money, whatever the situation is. Unrepresented, the easiest way, again, 3 and 3, imagine the buyer side goes away. The only thing you have to watch out on this side is that the listing agent and the seller have a contract that is signed that's called a listing contract. Before they put it on the market on the MLS, they have to have that fully executed contract that specifically states what the full commission is. So again, 6% is just the easiest rule of thumb. The best way to think of this is that the listing agent has an agreement that says they're going to get paid 6% commission. They're going to pay X amount of that percentage commission to the buyer's agent, which is completely normal. But if you're unrepresented, some agents will actually try to take that full 6%. Even though they're not representing you. So you want to make sure that if you're unrepresented, your buy side commission is going back in the seller's pocket because that puts the leverage in your hands for you to be able to go and effectively ask for a price reduction or ask for a lower price rather than the original list price it's at. The last type of transaction is the dual agency. This is the most common one and usually the most used way to get these deals under contract. I'm a big advocate of this myself. I typically like to do the dual agency or I will just represent myself because I am a licensed agent. But dual agency, this one is super, super awesome. The only downfall, some agents won't do it. I personally don't understand it. I can tell you the legality behind it is that they don't feel they can represent both sides of the transaction, buyer and seller, fairly, and I understand that. Their fiduciary responsibility as the listing agent will always be to the seller. I understand that too going into dual agencies, but with that said, sometimes the seller doesn't want the agent to represent both buyer and seller. Sometimes the brokerage doesn't want you to represent both buyer and seller. And unfortunately, as much as I have to say this one too, sometimes even the agent doesn't want to make twice as much money. It is what it is. With that said though, let's talk about the ones where the transactions actually do go through for a dual agency. Something I might do when I call is say, hey, my name is Ryan, I'm an investor in Phoenix, I'm looking to buy your listing at 123 Main Street. What can you tell me about the situation? It's all about building rapport with the listing agent and making sure they understand that you are a credible investor that knows what you're doing. Because at the end of the day, wholesaling is becoming more common and more people are aware of it. But one of the biggest pitfalls that's separating real estate agents and wholesalers being combined and really mutually benefiting each other is the fact that most real estate agents don't understand the wholesaling process. There's nothing against that and you can't fault them, but with that said, you just want to make sure that you're protecting yourself first and foremost And getting into these transactions is completely normal, and just treat it like a normal transaction. With the dual agency, when you're getting represented by the listing agent, understand again that their fiduciary responsibilities to the seller. Some agents may not be willing to give you as much information as the rest, but you're looking for the agents, the few and far between, that will tell you whatever it is about the seller's situation that you need to know to get the deal done. What do I mean by that? I'm talking about what their motivation is. Sometimes sellers are contingent in this market. They get under contract on a house to buy, but they need to sell their house quickly. That would be a perfect situation for me to come in and offer just enough for them to walk away with some money to be able to still buy their house, but also for me to be able to make sure that they have the ease and convenience knowing that they have their property sold, rather than having to deal with a traditional buyer, appraisals, repairs being done, 30-day closes as opposed to 14 days. Whatever the situation is, that's what I want to build rapport with the listing agent. I want to dive into some of the specific filters that I use on the MLS, because I'm sure that's what you guys want to know, is how I'm finding 5 to 10 deals on the MLS in one of the most competitive markets every single month. With that said, we're going to talk about the filters. First one I love is the remarks. Every MLS has some kind of remarks or description portion of the MLS where it's going to be describing what the property information is. It's usually like the realtor puts a little note saying, location, this blah, 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 3-bed, 2-bath house in whatever location is going to go super quick. That's a description. You can put in keywords like motivated, as is, investor, TLC, handyman, cash, whatever it is, the more creative, the better. But you can find MLS listings that have those specific words in them. That would be a good place to start. Second one is finding specific instances where the seller would be a little bit more motivated to sell. By that, I'm talking about probate. I'm talking about pre-foreclosure. Pre-foreclosures are coming back. I know a lot of people went through the pandemic and there was a lot of financial hardships, but we are now starting to see these foreclosures being enforced out here. That is a perfect place to start too. Another one is, in this market, we are in a seller's market. Everything sells. I always joke around, most of our listings we can have sold before we're even done doing the listing paperwork. So if you could find some areas, maybe some pockets of suburbs that have areas that are super desirable, the houses are gone within 24 hours, maybe target properties that have been on the market for more than 5 days. I can tell you right now, out here, we've got a few specific cities, Gilbert, Chandler, Mesa, Tempe. If it's been on the market for more than 5 days, my team has seen it, and we've got an offer out, and we've talked with the listing agent to figure out the situation. Another good one to look at, and this is the one I'll leave you with, is land. Land is fully expected to be sitting on the MLS a little bit longer than the traditional house, right? What if you were able to go and target land deals, but build relationships with developers to figure out what specific kind of land they were looking for? The only thing that's different between land and a traditional deal, you got to know zoning, you've got to know planning and development with the cities, you got to make sure that they've got the permits and that they want to be able to build what they want and what they can build on the lot that you're selling. But overall, it's usually the same kind of like escrow period, maybe a little bit longer of an inspection period, but nothing too crazy. The big thing to understand, though, when working on the MLS deals is that rather than having to build rapport with the seller, you're building rapport with a listing agent. My opinion, personally, is that it's much easier for me to call a listing agent, give them proof of funds, past deals, any testimonies I've got, basically any kind of information they want that will make me look like a better option for their seller, rather than having to go and sell myself to a seller, especially knowing that the listing agent is going to be doing the negotiating and trying to sell me for me rather than me having to do it myself. So there are so many opportunities with these on-market deals. I want you guys to understand that there are so many ways that you could do this successfully. And I want you guys to know that at the end of the day too, I'm always the guy that first and foremost will tell you to go and get licensed. At the end of the day, the best thing, and I didn't even really touch on this, is that being licensed, you can get commission on top of assignment fees. And I'll leave you guys with this one because it's a good note. But let's say a $200,000 deal, there's 6% commission, right? That's 3%, you've got $6,000 total. Out of that $6,000, if you were to assign the deal from $200 to $210, not only do you get that $10,000 assignment, you get the $6,000 commission just for representing yourself in the transaction, even though you're not buying it. So talk about having another tool on your tool belt to fully capitalize and maximize your profit. That's the way to do it. The last note I want to leave you guys with is a success story. I have to give a huge shout out to a couple of my students that I'm coaching, Aaron and Joe out in California. Within their first 4 days, they had their first deal. You guys want to guess how they got it? You got it. MLS dual agency, working with me. We were able to structure the deal accordingly. They brought it to me. I was able to help them dispo the deal. We found a buyer. Shout out to them. They got their first deal, their first 4 days, and it was under exactly what I just taught you guys. So I want to leave you guys with the success story so that you can understand that this is all possible. And I want to also tell you guys that you want to tune in next week. I am super excited to tell you I've got a special guest coming on next week that I'll be interviewing, and I don't think you guys want to miss it. I'll see you guys next week.